TV, things like that. But for this case, I just wanted to make it a little bit easier to see that and what they are. So again, we had this last time, which would be a brief synopsis. In this case, we're going to spend a little bit more time on financial management policies. And in this case, it's more operational. So we'll be talking about how you do certain things in the operation, which will also be the fund accounting. We'll have examples at the end that will kind of meet with the audit threshold, corrective actions, remedies of noncompliance, and specific conditions. Now, those three corrective actions are typically with the audit, where if you have a finding, you will have corrective action that you will need to do at that point. Remedies of noncompliance can either be in the audit if for some reason the organization does not comply at that point. The auditor and the funder can actually put in something about remedies of non-compliance, which could be things like financial hold or other things like that might be in that issue. That also, remedies of non-compliance could actually be in your post-award. Once you get the award and they have certain things that you need to do, that may be in that situation. And also specific conditions, which used to be called special conditions. A lot of times you'll see that more in the award process than you will do in the audit, but it could be there in the audit when they're talking about a corrective action. That corrective action may actually have a specific condition that you need to do with your corrective actions. So that's kind of where we go in the sense of the part of 2 CFR. One of the things, like we talked about last time, is that internal control and accountability is much higher. So that's where you'll start seeing the financial management policies, which will dictate, not only your policies, but how do you go about being in compliance. Now, fund accounting, I think, is quite interesting. Naturally, it was set up for nonprofit organizations and governmental units. It's one of those things that's unique to that industry. And it's kind of interesting to me. It's been around for quite some time. I actually took that course in fund accounting when I was in college. And it was kind of ironic that I took that course and also the oil and gas course for accounting, thinking that here in Texas, I would be doing more oil and gas accounting and other things like that. And just thought fund accounting would be something that sounds nice and I'd like to know about it. How ironic. I've spent most of my career in governmental accounting and nonprofits. So fund accounting has become the biggest part for me at this point. When you're talking about fund accounting, it's really talking about the accountability of the funds rather than profitability. So that's the difference between the nonprofit world and the for-profit world. Naturally, the for-profit world, you're looking for revenue that will come out as retained earnings so that you can put it back into the organization, or if you're a corporation, you may even have distributions in that sense. But for fund accounting, it's really how you spend the money. So it's really talking about transparency in this situation, and really doesn't look at profitability. And we'll see that as we go along with the fund accounting. Now, fund accounting will have two areas of funds. One will be restrictive in nature, and the other will be unrestricted. That's to break out apart the different parts of your organization. That really looks at it specifically when you're talking about grants. Grants will be restrictive. Other things could be restricted at the same time. And then you have unrestricted dollars, which will kind of go through that. And as you do your fund accounts in that sense, they're all self-balancing. So let's take an example of VOCA. On your fund account for the VOCA, you'll record the revenue that comes in from your when you receive dollars from your expenses that you had. You'll see the expenses that are on that report too. And at the end, you'll see a fund balance. And fund balance is the kind of nonprofit world of what retained earnings would be in that situation. So everything is kind of siloed into those funds in that situation. It could be quite a lot of funds in that situation, depending on the organization. I know that local units of government, colleges, everything else have a large number of fund accounts because of the unique nature of their area. Well, on the unrestricted side, most of the time, especially with nonprofits, a lot of nonprofits will just use one unrestricted fund to record all the unrestricted dollars. That could be either donors that provide contributions to your organization. It could be fundraising events. It could also be put into there. Other unrestricted revenue would be, corporations providing donations or private foundations. Those are the ones where the funds themselves are unrestricted. So you could use it for just about anywhere in your organization that you can do. Some organizations will actually want to detail it out a little bit more and have things like unrestricted fund for donors and maybe fundraising, and then another fund for corporate and private foundations. It just depends on your organization, how you want to do that. Some people like more information so that they can understand where they're getting their unrestricted funds. A lot of times in your software, you can actually have where the donors come in. You can actually put things in there about the donor and everything else. And either in that or another software, you can actually go back out to the donors and, communicate with them, knowing that that's your list of donors that you've had at that time. So unrestricted is kind of one of those areas that depends on the organization, how detailed you want it, or how, if you just want to have all that into one pot, that's okay. Now for restricted funds are typically more grant related or things that are restricted in nature. Could be a restrictive donor. Let's say that a donor, an example might be in a hospital, nonprofit hospital, and a donor provides $1.5 million and it's restricted to doing a specific wing of the hospital, let's say for heart surgery or other things like that. That would be restrictive in that situation. You'd have to keep that account going to make sure that the dollars that donor or donors provide for that specific activity is recorded and reported for the transparency of that situation. When you get to grant funds, now we're talking about our kind of world in that situation where you may have several kind of funds in that situation, which could be, again, the VOCA, VAWA, could be OAG, any kind of grant that restricts the funds to specific activities would need to be put in there. So you could have multiple. I've seen some small organizations that are just starting out and they might just have one grant. So they'd only have one restricted fund. And then the other part, as small as they are, they might only have one unrestricted fund. And that's how they report in that situation. Again, reporting for the fund and that accounting would be putting the revenues in there and the expenditures. Expenditures is kind of the federal term, but most people use expense in that situation. So if you get an auditor that comes in and keeps talking about expenditures and you haven't really heard that term, it means it's expenses. But that's, some people use terminology a little bit different. One of the big things, like I was talking about on the fund reporting, is that at the bottom end, when you have your balance, you'll have a fund balance instead of retained earnings. And it's quite interesting to me in the situation when I was working with the Attorney General's office, we actually used a concept similar to that, where when we're suing a board for breach of fiduciary duty, that the duty is that the fund balance would be used for what activities that they are going to do in their nonprofit, which could be within the community. We actually had a case where we sued a nonprofit hospital because they used their fund balance for what we called galactic medicine. It was just, they did everything for teaching and all this high value things, but they kind of redlined their services to kind of indigent care. And we sued them on the fact that they breached their fiduciary duty, even though they had their 501c3, that they had a duty to provide for the community in that situation. And that would be kind of, when we talked about that in the court case, it's like we explained it out a little bit different. It's just like a corporation having retained earnings, and if they were going to give it to their shareholders, that would be the same scenario as a fund balance for a nonprofit, that should be pulled back into the community for indigent care. So that's kind of the bigger area. What I have seen before is that some organizations just use their general ledger and don't go into having the fund accounts, so that when an auditor comes in and asks for all the expenditures for your for that part, like VOCA or one of the others, that they will send you the general ledger, and it's almost like, well, you pick out where the funds are in that situation. That's not good internal control. It gives auditors a little bit of a heartburn in that situation, because they're trying to figure out, well, is it your internal control that's not good, that you can't separate your specific dollars, so that when you're reporting for either having requests for reimbursement on your FSR, or being showing the transparency of your expenditures, that it's commingled within the general ledger and not within that fund itself. So that's kind of why we look at that very closely. So that's kind of one of the first things that I see with organizations. And when your auditor comes in or they ask you in a desk review, they're typically talking about the fund account itself. And for whatever dollars that they're going to review, you should be able to pull it out from your fund balance. So in that situation, we're talking about how do we reconcile within our organization so that we can get paid. So in most cases, you're using either general ledger or subsidiary ledgers. Typically, it's more subsidiary ledgers or the fund account itself. So when you're looking at that, you would look to see that what was the amount of money that you expended in that particular month in like VOCA, and that within your fund accounting records should reconcile to your FSR. So even before you request reimbursement, that's the first step that you should probably do, is ensure that what's in your financial records equals to what you are going to request for reimbursement, because auditors will look at that as they look across in that situation. You can go ahead and reconcile your GL to the FSR, but it's really more appropriate to look at your fund balance and your fund account to look at that. Again, the subsidiary ledger in one sense could be your, let's say for payroll, that you're doing a payroll report for that month and it's specific to VOCA. Then you can look at that and make sure that it does hit the GL, because the auditor is going to look at it at some point in time. And then your supporting documentation needs to be reconciled so that you can fit into that. In this situation, if you think about what an auditor will do, is when they're going to audit you, depending on the audit agency, they may go in two directions. They may go from your FSR that you have reported to them, and now they're going to go and test it to see, first of all, does your report equal to your records in that situation? And then they will follow the trail of expenditures downward to your supporting documentation. So that's one method that an auditor will do. Another method that an auditor will just say, okay, we've got the FSR. We're going to reconcile the report that you have that should equal up to your FSR. And then after that, we're going to decide to go backwards and look at your supporting documentation and see that it hits your financial records, whether it's on the expenditure side, the other areas like that. So that's part of your supporting documentation. Can you take your supporting documentation and can you show that it's hit the financial records in that situation for that particular fund? So you can see it in either way. I've seen organizations that have been tested one direction or the other direction, but it still comes out to the kind of same thing. Did your records equal up to what you're asking for at that time? Now, different funders will do it a little bit differently. For the VOCA, the way they have their reporting, that when you ask for a reimbursement, you're asking for year to date, and you put that information in. Their computer system and everything will work out the differences from the past report to this report to say, what is the difference in the money? And that's what they will provide you as your reimbursement. Others, and that's through their grants, electronic grant system that they have. The Attorney General's office doesn't do it that way. For one thing, they weren't really set up to do grants, so have done it through either Excel documents or Word documents and everything. And what they do is they say, give us this month's worth of expenditures that you're requesting, and then they will look at it in that situation. They'll ask on their FSR the report so that they can see how much you spent in each month and see if you're overspending or liable to be out of money at that kind of point. But they typically will do the audit of that particular month that they decide, or 3 months in that situation. So kind of as you go along, make sure that your records fit with what you're reporting. And that's the best way, is through the fund accounting system, looking specifically to whatever grant that you're requesting reimbursement. Now, when we're talking about supporting documentation, in this situation, we're talking about non-personnel supporting documentation. Roger, again, will do the next webinar, which will be on time and effort and payroll, which gets into a lot more detail and is typically where most of the findings are going to come about. Now, in supporting documentation in this way, what you want to do is you want to have the information that supports whatever transaction that you've done. Some organizations have kind of confused at one point that they will have the credit card that somebody has just signed the credit card document, and that is not true supporting documentation to auditors and other people. That's a method of payment, just like you would have written a check or whatever to do that. So what you need is to have an itemized invoice that includes kind of the dates of service and dates of purchase, things like that. So you may have paid off of your organization's credit card for, let's say, inventory or supplies or even a laptop. If you just sign that transaction in that way without that information, then you're going to be set with a finding because you don't have the supporting documentation of what was the cost and how did it come about in that situation. The other vulnerabilities I've seen would be in travel. A lot of times that's really hard. One thing, and if you're a financial person that works on all the travel expenditures and everything, it's hard enough just to get staff to report travel on time so that you can review it and then work on the report so that you can get the funds from the support from your funder and everything, and then also pay the staff for that part. So that's always been kind of an area that really takes time and works through. I've seen organizations struggle quite a bit where staff may take 2 to 3 or more months to actually submit the report. One to me is, well, it's kind of wild that a staff member can float that expense for 3 or 4 months when they really want to get paid for their work through the, the meals, the lodging, whatever else that they had to pay for at that time. So that's always kind of a vulnerable part of an organization. Mileage, in the old times, you would see that most organizations had a mileage log that you would have to report in. Naturally, when we're in the 21st century, but before that time, with the internet, you can actually use, like a Google map or any kind of map that you can just plot out from point A to point B and look at the mileage that's there. And then if it's round trip, then you double it. And that's adequate supporting documentation for that type of expenditures. When you get to the part of the reports or vouchers, they need to be completed at the end of the trip. Otherwise, it's a prepaid cost that you may try to go ahead and request reimbursement. It's not the best way to do that. First of all, things could change in that part, and you may be over requesting for funds, or maybe even under, and that can cause an issue when you're paying your staff with that. So best practices is at the end of the trip, and auditors will look at that too, because that again goes back to internal control. Why are you doing the prepaid? There may be reasons for that. Staff you may have a situation where a staff person doesn't have a credit card or other things, and they do prepaid travel and everything like that. But it's more of a vulnerable part in that situation to kind of do that. When you're going out for training or anything, there needs to be something that supports the type of training and everything else. It might be, a certificate, or typically most don't have well, it's hard to get a sign-in sheet from whatever organization that's doing the training or anything. So something that can provide that training agenda, other things that will supplement the supporting documentation. Do we have any questions before I move on? I know this is going kind of quickly, and if there's anything that you may need.
You have one question in the chat box.
Okay.
We have someone asking, why does the state ask if the applicant agency expanded federal grant funding of $750K? And if yes, enter the date of your last annual single audit, but our state grant is less.
Yeah, the reason that they do that is so that they can kind of get the population down, and in the sense of the scope, so that they can see how many of their organizations are anticipating to have single audits. And with the single audits, that's naturally the compliance part with the financial part. So when I was with the Attorney General's office, we would send something out there, and we'd see that maybe only 20% of our grantees had that significant funding and expenditures that we should anticipate a single audit from them. The others, we'd sit there and go, well, if it's only 20%, then 80% of them will have a financial audit. So it's more of adjusting and figuring out what your the whole population is in that situation and how you structure that. Because when I was with the OAG, would say, okay, we know that a good portion of the audits will come sometimes 6 months after the end of their fiscal year, and most programs will have their fiscal year either by state, which would be the end of August. So we would count out how far we would need that most of the work that we're going to have to do to review will come up in that situation. If it's on the federal side, it'd be September would be the end of the year date, and October is the beginning. So you kind of look at that. So if you have only 4 auditors doing that type of work and you have thousands of reports, it's very good. And that's why they ask for that kind of information, so they can judge how many are going to need to be fully reviewed for the single audit, how many are going to be financial audits, and approximately at what time, because they more than likely in that document they ask for your year end. Okay. So that is primarily the bigger part of supporting documentation. Auditors will naturally tell you, if you don't have any supporting documentation, then you can't truly show that that expenditure existed. And that will be a finding, and usually a question cost on that finding. I see that more in the situation of nonprofits where there are kind of administration changes. The CEO has left, and now, or the financial person has left, and the new administration that comes in may not know where all the information is. They may not have given them everything, first of all, but the second, it may be in such different areas that they're having trouble to find the supporting documentation to show that the expenses were actual and reasonable at that point. So there's a kind of issues that come up every now and then on that. And, you know, as we know, with the nonprofit world, you know, organizations change quite frequently in that situation. Okay, one of the things that I think is very helpful is kind of understanding kind of the dates of obligation for things. I get that question quite a bit. And also there's kind of uniqueness to it. So, you know, if you're acquisition of property, typically it's not, if it's property, most of our grants don't have that, but we do have like an ARP grant and other things that allow for that kind of thing for a building or other things like that. You know, HUD does that across the board, and naturally the date of for the obligation is when the contract or the written commitment is made. So that's when you should report that on your financial statement as either accounts payable or other things like that. So that's where you have your date of obligation. Personnel services actually first would be when that staff member is first hired, but then throughout the time, it's when the services are performed. Most organizations, and I know state organizations like the OHE, they pay you the month after you've performed the services. So if you performed your services in March, early April, you get your salary in that situation. But the date of the commitment and the obligation was at that point of when the services were performed. For services of contractors, that's typically the date that y'all sign the commitment itself. So it's a contract or other things like that. Where I see some vulnerability, especially with contractors, let's say for counselors and other contractors that you have that pretty much go rolling each year, that you stay with the same contractor, stay with the CPA firm or counselor or other things like that, that where you get into that kind of issue is that after 2 or 3 years, people kind of get lax and they say, well, the contract goes until we decide not to stop. It's really kind of good to have some sort of documentation per year that you're still on that contract. It may not need to have a brand new contract, but something that you can show that recognizes that commitment and that obligation. So it might be even as simple as an email saying, we're continuing our contract for the following year, date such and such and such and such. That would be okay in that situation. It's always good to kind of update those contracts because sometimes those things change in that situation, specifically kind of units of services that come up might change from the last time that you had that contractor to this time. So let's say an example would be, a counselor that you're paying for each either group session or individual session at X dollars. And now you've gone to the next part that they're going to charge you more for that. You should have something in writing. And I would kind of recommend going ahead and just either amending the contract or writing a new contract. Again, as we talked about supporting documentation for travel, again, that is the support that's taken as the travel has happened. It's taken after the fact because there's a lot of, supporting documentations you need, the expense itself. You could have proposed travel and then for some reason, either the organization you're going to cannot be there, somebody could be sick or something, and so there's no travel at that time. So it's always best to do it when it's taken, that situation. For rental and lease properties, again, it's kind of the actual use. So let's say for us at TASA, our facility that we rent, we want to make sure that we have the contract itself and it's set as a supporting documentation. It will give us also the amount of rent each month in that contract, and you can use that as it goes along as supporting documentation. And then you may even get an invoice, but it's the actual lease. So if you've rented for March, then there should be something that's your obligation for that month of expenditure in that situation. Utilities, all those kind of things would be as the services are received. And then the period of availability, I put that in there because of the fact that you're obligated at the same time. When you sign the award, then not only is the funder obligated to pay you and to do the oversight, but you are obligated to perform the activity of the grant. So that is something that you look at. Where we get into some issues are that at the end of the year, closeout or other things like that, if expenditures happen after the period of availability, then that's not an allowable cost. Now, you may have a cost that's taken before the end of the period of availability, but either like accounts payable or other things gets paid after that period. That's still okay because that's within the closeout period. So when you look at those kind of obligations and everything, kind of look at that. Again, if you're have a new award and you've done some pre-expenses for that award, that's unallowable unless you get prior written approval from the funder itself. And that happens sometimes where they will do that in that direction. Typically, most of the time, that will not happen. Okay, contract management has now become a little bit more extensive than it had been before the TCFR. Part of that is because of internal controls and everything. And where I've seen those kind of situations is it's the lack of documentation. So the lack of a contract there can be, that's a supporting documentation. That could be an issue. The new thing is that not only do you, like we used to do, is just get an invoice for whatever that was, counseling services for that month, accounting services, legal services, whatever. And that's all we had to do is look at that document, look at it reasonably, and that was all the contract management that we really needed to do. With 2 CFR, they're asking for more than that. And I've got a sample document that we can look at in a couple of minutes. And when you do that, they're asking for contract management would be, you're actually managing that contract, where services provided, what was the cost of the services, you know, is it applicable to any of the federal, state, or local regulations in that contract itself, to look at that. Purchase orders, requisitions, anything like that would be part of contract management. Itemize invoices and receipts. Yeah. When they include dates of the detail on goods and services, that's okay. But now they want a little bit more than that. And then for your kind of things with counselors, licensed counselors, or even CPAs, you may want to have a copy of their licensure or certification. That's good support. Again, this is some stuff that has now, in the last couple of years, where I've seen programs have a finding, because all they did before was like everybody else. You got the invoice, you looked at it, it's reasonable, and you signed off, and that's it. And now with 2 CFR, you need to do a little bit more. And what is a little bit more? First of all, that there's a process for your contract monitoring. How do you ensure that there is some services? What do you do with the process itself? Monitor, usually, you know, describing any kind of follow-up is a good kind of contract management. Identifying the contractor and who's doing the work, supervising the approval of that contract and the expenditure. Over here, I have the contract management worksheet that I developed for some of the programs when they got audited by VOCA, and the finding was kind of this situation. Let me see if I can stop share and bring up the actual document. I did send that to y'all as something that you can see because it's so small in this situation. So let me see if I can go here. Where is my share? Okay, can you see that Excel document? Crystal or Roger, can y'all see that?
I can see it. Yep. You might want to focus
Okay.
in a little. You do have like half of your cells that are blank showing. So.
Oh, okay. I wonder why that's working. I don't know how we could do that. What part is not showing? Is it column A, B?
Yeah,
or
your all your columns are there. They're just still a little bit small. So I don't know if you wanted to go
yeah,
to view.
they're hard to do.
Yeah.
Yeah, let me see if I can actually bring it up a
There
little
you
bit
go.
more.
Just make that just a
Okay.
little bigger. There you go. Now we can read
Now,
that a bit better.
okay, good. So what we did to do the corrective action for some programs that VOCA auditors agreed with and allowed in that situation, we built kind of a worksheet that we could do in that situation. So one of the things that we did at the top was the type of monitoring that you were doing. Was it a desk review, or on the next side, on-site? You may go on-site for counseling to review kind of things. Was it monthly or quarterly, that kind of situation? On the on-site, did you actually review records or or have direct observation. You may have been, somebody may have been there for a group counseling and making the observation. That's something that you can show as support, that you've done a little bit more than what we used to do. The monitoring date, which would be the date that you have performed that stuff. What we did was in a box here was kind of like the person that actually did the monitoring. A lot of times it's not the financial staff that does the monitoring, but it would be somebody that's close with the vendor in that situation. So a situation would be like counseling. Well, one of your advocates probably had more detail about the counseling. They decided in the contract certain people would go for group counseling or individual counseling. Well, there's ways that kind of information goes back and forth between your advocate and your contractor in that situation, counselor, whatever. That's what they kind of need in one sense, is good supporting documentation. So we put the kind of the initials or names or other thing, the name of the contractor here, the vendor in that situation. And then for the invoice that they have, it may be in this direction where you have the vendor, service date, client date, as long as it doesn't really have personal identification in that kind of number itself, that you can do that. It would go across, time spent. Was it in the office? Was it somewhere else? Is there a kind of, was this another bill from somewhere else at the same time? That's a way to kind of look for duplicate bills. And then finally, the monitoring note was like, this person, GW, was kind of reviewed the invoice and discussed by phone the counseling service. And they did that for each one of those things. It might have been at weekly or at the end of the month, but something that can show that you did a little bit more than just, it was an invoice and I went ahead and paid it. So this was kind of one of the things. And then it was approved by whoever was processing that, the date of approval, and then any additional notes. And in the additional notes, you may even have a situation where this one organization wanted a supervisor to provide some information in there. But this was something that kind of helped some of our programs that were caught with that type of finding. And you can share that, or you can change it up to your organization. But I'm comfortable with this document because the auditors had no problems with it. Let me go back to share screen. Now let's see if that didn't work. So here we go. Let me try to get back to the okay. So that's kind of a good process to document kind of your contract management part. Any questions before I go on to the next?
Yeah, Mark, there was a question in the chat box.
Mm-hmm. Could you read that out for me? I don't have the chat box up.
Yeah, it looks like someone asked, is this something you need for any vendor or just construction? And I kind of put that VOCA usually requires contract management supporting documentation for any vendor that you put as a line item request on their budget. Is that right,
Correct.
Mark?
That's correct. That's more the issue now, that they want to see, because before TCFR, there really wasn't that internal control that talked about contract management. And now this encompasses anything that you have a contract. So let's say you have a bill from your accountant, and you may have it as a unit cost. It may be that they charge you for client write-up work. That's kind of, you give them the information, they put it into the system for you so that it can go through for the financial process. That's billed at whatever time and everything for that type of services. It could also be a unit of service that says, for each month, we do client write-up and it costs X dollars per month for that, for let's say April's client write-up, or even client write-up might be, we provide you with trial balance and financial statements in that situation. Could be attorney's fees for whatever. Then you would use this in that kind of situation with attorneys, not only just counselors, but what we have in there. One of the unique parts might be, let's say you're doing, most of the time it's not, maintenance is usually not into a contract, but if it was, then you might need to have something that's just as simple as you discussed last month's services with the company, or something that documents that you did more than just look at the invoice and paid it. That's what contract management really comes out to.
I think a lot of people, Mark, like a lot of agencies tend to have contracts for like IT departments and things like that, or
Okay,
long-standing things. And
right.
sometimes that's where things get missed, because we're used to having that just happen and there was no need
Yeah.
to necessarily document.
Yeah, I would do something. I mean, anything could be, it could either be about a phone call that you talk to your IT person, or an email that everything's going well, any issues or anything like that. Might be just what you need to do. It doesn't have to be a true, kind of like you would a desk review or an audit in that kind of situation, but something that kind of shows that there's some communication that's going on and then it's going along. Might be, I would probably not recommend it, but you could have an exception report where on IT that everything went well and there's no exceptions to the services. That might be something, but that's kind of pushing it a little bit in that situation. It's one of those things with internal control and the 2 CFR that's caused organizations to do a little bit more than they used to in that situation. But you can find ways to do that as less burdensome as it could be. So an email, a phone call, whatever you did, just document it. You had a 5-minute conference call with your IT person on the services or something. I hope that's helpful for people. This is kind of one of those I've seen happen fairly often now, when it didn't before. Any other questions before we go? Because this is kind of different. Okay, so now we go to procurement. And we actually talked about this before the last time, about the procurement methodology and the different methods that we have. Most programs will be in the micro purchase because that's 10,000. Could be more than that if you show the ability to do that. Usually it's, you can go up to 50,000 if you can prove certain things, like if you had a single audit and the auditor says you're low risk auditee, that's very good documentation. You could then use the micro purchase up to 50,000. And in that situation, there's no quotes, equitable distribution, or kind of those things. I think that's where probably 80% or more are in there. You might get up because you're more than 10,000 on specific things, would be a small purchase. And a small purchase in that situation Greater than 10,000, you might be talking about IT equipment, stuff like that. Communication. One area that I could see going up like that would be if you're doing a whole new 800 number with the communications, or let's say with your organization, you've changed from one set of phone system to another set. I know we went to kind of a different phone system for us, and it may have cost us more than $10,000. This would be a good way. You would then look at it as a small purchase. Very rarely do I see the other sealed bids. I doubt that you would see that unless you're doing a capital campaign, but most capital campaigns are with unrestricted, so you really wouldn't need to do that in that situation, but that would be those kind of things. The only way I could see that happening is, let's say, with the HUD money, that you're going to do a transitional housing or something, and it's now greater than 250,000. That's when you might have the sealed bid kind of process and methodology. Most of the time, it would be competitive bids that are over 250,000. Those are kind of few and far between. More than likely, it's your funder or your pass-through entity that probably has that kind of situation for competitive bids. And then finally, sole source, that's very unique. Again, like we talked about, emergencies, public emergencies, pre-authorized by the agency. There's no competition because it's the uniqueness that it's a critical event and it's for the public. You don't want people to die in a fire, in a wildfire or anything else like that. Good example nowadays would be just that wildfire that happened not too long ago in West Texas. That'd be a sole source, and I could see that happening in that direction. So with that, how do you document it? And one of the things in the procurement, you should identify which methodology you're using, kind of the justification for that methodology, which is pretty simple. If it was a micro purchase, you just say micro purchases are the process, and we don't need to do bids or other things like that. And you can follow through in that situation. Documenting the procurement items. So what are you doing? A good situation would be computers or something like that, or even supplies. You might do it that way. And then you document the approval. So here we go. And let me see if I can pull this one up. So this is a Word document that we kind of worked through. There it is. And the shared document.
And I guess we can put it, well, we don't have to upload it on the van until Monday. Or Tuesday.
Okay,
Maybe
so we're
has
right
to,
here.
or you don't know.
Hey, Mark, I accidentally put you on mute. So you might have to unmute to keep teaching us.
Mute right here. So now this is a Word document. It's pretty simple in this situation. You just got a part, the name of your organization, the date, the employee that's doing the procurement process. And then down here, all you need to do is just check the box for the relevant procurement methodology. Now, most of the time, like I said, it'd be either micro purchase or small purchases. And then, you're talking about the date of purchase is one of the things. And then the line items that you have. So you might have, a laptop and other things that go with that. You could have kind of supplies. You may make supplies more general with the parentheses of what that supplies are, paper, everything else like that. And then the unit unit cost and then the total dollars so that you can come up with the total amount. And if it's under or up to $10,000, again, you're okay because it's in the micro purchase. If it's greater than that, then you would need to go down here and make sure that whatever dollar amount meets that procurement methodology. So that's how you start documenting. You come down here in your procedures, you just say in here that we use micro purchase for laptops and just you don't even need to put a check for lowest cost of bid in that situation, but something that gets there. Here would be more if you're talking about the simplified and the kind of competitive bid. That's where you really need to kind of explain what you're doing here. And then the approval process in that situation. So this is a good little document. It's not time intensive, specifically for micro purchase. Any questions? But I go back to the next.
I just wanted to do a quick check-in, Mark. It's
Okay.
2:37, and
Right.
you do have a question about the rules that you're referencing apply to community development block grants, and they're suspecting yes, but they're looking to confirm.
Okay. Yeah, community development block grants might have a different part where, yes, they might be greater than $10,000, and you may want to make sure what your award is. The good part about the procurement worksheet is you fairly much know what your budget is and what you plan to cost. Now, it may cost a little bit different, might be a little bit less, might be a little bit more, but you already kind of know that in that block grant, your purchases are still under 10,000 or up to 10,000. Then you know that part and you can kind of move through it in that regard. So yeah, check with your funder if you're not sure, but the block grant might have more than the 10,000. It could be in, I know when we had the procurements with dollars from COVID, that we bought a lot of programs, X number of laptops or communication devices or other things like that. And this would have been the document that we would have used to document that kind of situation. The organization wouldn't need to document it because we were the ones that were purchasing, and we would need to follow the procurement process in that situation. But this would give us that supporting documentation. Now, on the other side, when we did that and we sent out laptops or other communication devices to each program, the program needed to go ahead and do an inventory of that stuff, because it was, dollars that were signified for controlled cost. And controlled cost is kind of a terminology where it's under the $5,000 equipment, but that the funder wants to control that cost, which is typically things that could easily be lost, stolen, or whatever. So usually, like the governor's office, OAG, and everybody else will have a thing that says, yes, it's under $5,000, but we still want you to record that so we can have good control that the laptops are still there. Here's the dollar amount, the serial number, everything else. So it's almost like your inventory for capital items or large items over $5,000. Back again.
Mark, I have a question about equipment.
Yes.
So when we acquire equipment that is grant funded, how long do you have to maintain or sustain that equipment under that grant after the grant contract has ended?
Well, it kind of depends. I hate to say it that way, but typically I would say 5 years, depending on what kind of equipment it is. So let's say that if it's kind of laptops and other things like that, those usually have a cycle in the sense that a lot of laptops by IRS will have it as their that I think 4 or 5 years is when their technology is been used up in that situation. So you would have it up to that point. You can, in those kind of situations, you can do something when it's working with discarding that document or that laptop or any other things like that. First thing is that you can transfer to another federal grant if it's federal money. So let's say it's a laptop. Its technology has been considered obsolete, but you want to use it for, let's say, another program that's a federal program to train victims on the internet or whatever else. It still can do that, but it's technically considered obsolete. That would be okay. So you would first look at the thing of, can it be matched with something else that's a federal grant, if it's a federal dollars? Then the second part is then, if not, then state funds would be kind of the next thing. If it's specifically if they're the same kind of grant activities, that's easy to just transfer. And now you don't have to use that laptop because it was for domestic violence under a federal grant, and it's now considered obsolete. You can still use that grant for, let's say, for human trafficking or other things by that time, because it's deemed to be obsolete. Most of the time, obsolete technology like that is disposed of. But I know organizations may need to keep that for a while, and they could use it in that kind of discretion. The last part is then you can go ahead and discard that and make sure in your inventory and everything else how you did that. Did you discard it in the sense that you gave it to another nonprofit, or was it just we destroyed it and because it was obsolete information? Is that helpful for you?
Yes, that was very helpful. Thank you.
Okay, those are kind of those funny things that you look at. I've seen before, and I think they've changed it again. The grant world actually had a little bit shorter time frame. It was 3 years, but more that I looked into it, it started, I couldn't find that year timeline. So I'm conservative about that part and just say, okay, I'll just use the IRS standard, which is 5 years. You can talk to your funder, and they may decide, as a prior approval, yes, you can discard that, or you can use it for some other use as obsolete equipment. So that's kind of a good process to kind of keep you safe from any findings and everything. So you've documented what the purchase is about, the procurement, and what kind of methodology, and then some sort of information in here. A lot of times I would think for, let's say, for the micro purchase, you may put it in here, let's say for, again, supplies or communication like laptops and everything else. The federal government wants you to kind of use different vendors if you can. Now, in some areas, let's say the Panhandle, you may not have that many vendors to do that. So you may want to put in there, we used Office Depot for this, and we plan to use Staples or something else like that. that just gives a little bit more that the auditor will, okay, they know the process, they know that they're going to try to do something. And then hopefully if you purchase something from Staples or some other place like that, you've got that kind of information. That kind of information to me is always kind of valuable because auditors look at internal control. And when you look at that, you say, first of all, they know the area that they should be doing, whether it's that micro purchase or whatever. They understand the compliance in one sense, but they also understand in that kind of note in there that they're going to look at other alternatives within the community if it's under a micro purchase. And then finally, we're back to kind of the audit issues, because now that you've done all the work and you've made sure about the fund accounting, you've controlled your accounts with the expenditures, let's say for VOCA or for the OHE or a VOW account or anything else, that it can be traced back to that fund in that situation. Well, when it comes to the audit issues, that's very good for monitoring from your funders. Now, when you get to your audit issues of 750,000, we've talked about it before, that's 750,000 of federal expenditures. It's not the award. So let's say you had, for whatever reason, $760,000 of awards, but you only spent 720,000 in federal throughout.
I think Mark froze on us. I don't know if Mark may have lost his internet connection. I know he had about four more slides left, so we'll give him a second. I'm gonna try and send him a message through our TASA system because that's off of Zoom. But he might not have it on since we are in a session.
He might be trying to reconnect again.
Yeah.
Yeah.
As my kids would say, is that one planet still in the microwave, or meaning is Mercury in retrograde that causes technology and communication problems? So we'll just blame it on that.
Leave. There we go. So can y'all still hear me? Okay.
And just as a time warner, where it is just hit 2:50, so you have about 10 minutes.
Okay. Okay. So we're pretty close in that part. Let me get back over here to share because I think it knocked me out. Okay. So anyway, we're here now with the threshold and what it is. I think I actually explained that, like TASA and some of the other big organizations, you may have two single audits, one a federal single audit that meets over 750,000 of federal expenses. And then you might have a situation where you're over 750,000 of state grant expenses, then you would have that. Again, the corrective action, this is what kind of a summary of the 2 CFR would happen again as you go along. Remedies of non-compliance if that got to that point in an audit. And in the audit, if there's the auditor or the funder decides from that type of finding and everything else, they may want to do a special condition in one sense, or a specific condition, which may mean we're fine, except that we want you for the next quarter, send us a supporting documentation when you request for reimbursement. And they may look at it as a small desk review for 2 or 3 months and decide, okay, we're comfortable with that, we'll remove the special condition. Any kind of questions that we have, I've gotten to that point. Again, hopefully we've recorded the questions so we can gather that together and then do a Q&A situation where we can provide the answers to that. I don't think we had too many last time, but I'll need to go back and see if I think we had 1 or 2, and we still need to go ahead and make do the answers to that and as an FAQ and send it to everybody that was on that one. And then the same thing here. Crystal, I think since it's Thursday, will it be about 2 weeks before this will go on to the YouTube channel?
There may actually be just a little bit of a delay because Shelby is working
Okay.
on our conference registration. So we're gonna let him
Oh,
finish.
Okay,
And that way we
yeah.
can all get registered for conference.
Yay.
It may be 3 weeks this time.
Maybe 3 weeks. Okay. So kind of
Mark,
look
when
at
was your
that.
next session? You said you had the third one coming up for the
Yes,
time.
Roger's going to be actually doing that. I don't remember, but I think it's the 3rd week in May.
Let me just, it's on the May 16th.
Yeah.
It's
May
on the-
16th. Okay.
Yes, yeah, it's whether that's where we'll talk about your payroll part of it, what kind of
Yeah.
documentation or supporting documentation you should have.
Yeah.
All right, thank you.
Yeah. Roger's on that. So he'll work that out and we'll go from there. But that
We'll
will be
try
the
our best.
3. Well, yes. So that's the 3 that we have. I would imagine after the virtual conference, we may start about 2 or 3 months later to do another set of series. And we'll let y'all know at that point. We're looking at a couple of different things, but we'll wait to get with Tim and management, executive management on how we do that. We might have regional kind of training or something like that virtually. There's a lot of different ways we could do that, but we'll let y'all know as we go along. And if you have anybody that was not on the listserv and you would like to get them on, specifically if they just now started or after this, you hire somebody that would go, send me an email and I will put them on the list so that we can make sure. And the other way too, if you just happen to be leaving the agency, please send me an email so that way I can, remove you, and that way the emails don't bounce. So that way, hopefully we can maintain the listserv a lot easier. Thank you again. If y'all have any kind of questions, we'd love that.
Thank you all again for being here. I always learn so much. This is my 2nd time to sit through this series, and this is not my primary world. I train in other areas. So I always just learn so much in these webinars. Thanks for all y'all do for survivors. Happy Sexual Assault Awareness Month. We did post the link for the exit evaluation. If you could take just a few minutes to fill that out before you head out today. Have a good weekend. I hear certain parts of Texas are under severe weather watch, so stay safe.
Oh,
and
no.
We will see y'all next time. So,
Take care. Bye-bye.